Good weekend all. Ira Epstein with your SPDR ETF video, and this is for Friday the 21st of February 2020, obviously after the close of the day. Big down day in stocks. I think that about 75% of the S&P components were down on the day. The market went into a full, they don't want risk. They went to risk-off environment today. They stepped away from it. You see the gold was up pretty good. GDX was up along with it. Silver, TLT, the bond scenarios. The metals down, rather up. Energy's down a fraction on it. And we'll get into the individual sectors here for some of them as well. As we look at the technology sector, you can see how it's swung to the downside. It didn't just begin that today. It actually yesterday stepped out of its trend. You can see how that big drop, you'll see what it is when I put the swing lines on, and here's the swing lines. So coming in, you had already had the higher high, lower low. So that hurt that sector, void of a trend. A trend is my definition of a downtrend to be lower highs, lower lows. You don't have that. You have a higher high and a lower low. So I'll define it as no trend. The line in the sand to me is the 18-day moving average of closes. And what I mean by that is so often a market will stay away from it and it seems to pull back, especially in ETFs. You can go back here. I can go further back. For those of you that get my afternoon subscriber ETF SPDR video, I show this. I go far back and I'm showing you what I'm saying. So with this lost support I'm looking for would be towards the 18-day average of closes. That number was 99.76. You closed under it at 99.44. So if you closed under it, where might you drop? Well, if the market wants to go into a full-fledged retreat, let's assume the coronavirus news is terrible over the weekend, maybe you go to the lower Bollinger Band. That number's right now 95.56. It'll probably climb a little bit the way the math goes here come Monday, but not too much. So somewhere between there and there is where I'm looking for the support. It's also important to note you haven't hit since December a lower Bollinger Band. That doesn't mean you can't hit it. It would be an interesting event if it did. I don't see a trend in this market, and I see momentum having turned down. So I see the bias down since you closed over the under the 18-day average. I don't see a trend on the swing line, and I have momentum pointing down. When we look at the industrial sector, even coming in, we already had lower highs. Market had stopped yesterday temporarily at the 18-day average of closes. Momentum had turned down, and it's still doing that. Again, if the market can't find its footing right here against this 18-day average, you have a possibility, if you decide to drop hard, of the 100-day average in the lower Bollinger Band in the 8106 area. Because the market closed at 83.59, it's over the 83.57 level, and at least going home, while the swing line is down, the bias is up. The two fight each other temporarily. In the energy sector, we had a nice run-up, and I'm going to stay with what I teach. Other than this one day yesterday that you got up and you tried to lift up towards that Bollinger Band, the most recent week we have been hitting that 18-day moving average of closes, and you did so again today. The trend is what? Well, the swing line is up, but the settlement today was 54.14 under that 18-day average. I don't see anything right here, and I have momentum trying to turn down. A difficult market. If the bulls bought today, and they might well have at the 18-day average, I don't think they want that market under 53.63. They'll probably bail at that point. I'm just giving a guess. In the NASDAQ, yesterday, we stepped out of the trend on the swing line, but you still had the embedded reading. The embedded reading rules the day. So until it's lost, I think the pros are nibbling on the long side. It was lost on the close. The market admittedly just went back to that line in the sand and held it at that 18-day average. So no, I'm not declaring this market bearish yet, but I am saying the upside momentum's been lost and it has stepped out of its trend. And now the question is the news over the weekend. What does the market do with that as it went right to what I call that neutral number, that 18-day average, and it's sitting there? When we go to the emerging markets, I'll step back to yesterday again. We had lower highs, lower lows, momentum pointing down, trend down. Next support under the market is the 100-day average of closes, and under that, 67.61. What knocks the market out of its downtrend would be taking out this 69.11 number right up there. What the market did today is it went to the 100, probably offered some people an area to cover some of that short money in at that point. Now the question is, does the market get bad news and get a hit down to the lower Bollinger Band, or does it pop back and fight a battle at that 18-day average area? In GLD, we now have 1, 2, 3, 4. In fact, I want to come all the way back to here. Not over there. So first day over the Bollinger Band, second, third, fourth, and that's it. I wouldn't be surprised if we try to fill that gap sooner rather than later, but what's clear is this sideways action was a breakout. The momentum is up. It is not embedded. The market's gotten ahead of itself. It's rare to get more than 5 days in a row over an upper Bollinger Band. So I give, on my rule of thumb, that's all it is, a 1% chance for Monday to be over it. That's not bearish. That means that, yes, the market's bullish, but it's ahead of itself. Maybe you can come in if you're a bull on a better number, or do you wait for the market to decide, is it going to embed or get rid of the overbought condition? Bunch of questions there. The gold miners, 3 days in a row over the upper Bollinger Band, overbought. This was obviously, and I normally I would not say that that's enough of sideways action, but apparently it was, looking at it. Certainly the market's been throwing out signals without this even run up. Let me take you here. Higher lows, higher highs. I was looking for better resistance at the Bollinger Band. Generally, when you hit it the first time, it backs away. It didn't. It's followed through 2 more days, which is great, I guess, for those that are playing this gold market at this point. In TLT, up and over. Yesterday you got to the upper Bollinger Band. You jumped today with the fear that we saw. If you were watching the 30-year, the 10-year, you're dropping to historic lows on interest rates as people are moving out of the risk assets into the safe havens temporarily, as they're nervous about what this weekend might bring and where this coronavirus is. When you come to the euro, and this is the FXC, this is the ETF that follows it, finally getting a bounce. And I've said to you all week, this reminds me of coffee, how the market broke and then it got its bounce. I could make an argument that you might even get a bounce to the 18-day average of closes. It's going to be important that you look on Monday morning to see if you lost the embedded reading. Now, while this opens at 8:30, the currencies start trading at 5 at night. If they're down, the odds are that won't happen, and the pros will look at this as just a bounce where the market got ready over a weekend and fails. If you get a strong market into the morning hours before this and you see the euro currency strong, probably going to be strong in this too, and then you got to change your philosophy on the trade. Last, this Invesco Solar. We keep hearing that China is going to throw a lot of money this year at the solar. And you can see you've got, number one, the embedded reading. You got a bull chart, and this is what I typically expect of bulls. You get up, you hit that Bollinger Band, and then you start backing to the right-hand side of it. Still very bullish scenario. Nothing has really changed here. And I don't think this market acted bad with so many markets down today. But again, we have to see what's going to happen. So for the weekend, you might want to do yourself a favor. If you want to see my SPDR ETF video that I put out by 4 p.m. typically Monday through Thursday. Fridays I can get a little later. It doesn't matter because I'm still in the office waiting to go home, but you're not going to be trading these till Monday. It's out already. The only way you're going to get it is signing up for a free trial. Go to our website, www.iraepstein.com, sign up for the free trial. We'll probably be ready to move out of just the free trial status by the end of the next week. We're getting a lot of people that are looking at it, and it makes me happy. Hope you like what these have done. Write to me on my YouTube if you have certain markets you want covered to replace this TN. I'll be happy to do it, and we'll get a special of the week, or maybe 2 of them a week. I'm Ira. You have a good weekend.